we have several more boxes to check to get out of this volatility land that we're in, I think. I think the month of October obviously was the exception, not the norm for what the fourth quarter is going to look like. And I think the fourth quarter is going to be better. But understand, we needed to sort of get through a bottoming process technically, right? And you know, on really good volume. We saw that piece of it. We need to get the midterms behind us, so you can check that box, and that's good news, right? As expected, no surprises, nice little bounce off of that news. The Fed actually cracked the window open a little bit yesterday in their commentary about business spending moderating. I think that's a really good sign that they truly are data dependent and perhaps aren't going to act like robots in 19 and just raise rates once a quarter. So I think that's good news. But I think the big hurdle that we have and the thing that's going to cause the most volatility right now will be news around the China conversation. Do we find an exit on the trade war with China? And I think, whether it's the G20 at the end of the month or feedback we get going back and forth with the administration, how are we doing with China, and can we get to a resolve?
Well, we had some, I guess those, I don't want to call them headlines, but sort of hints or rumors, remember last week or right before the midterms that maybe we're going to have a deal with China. The market sent a spike, and Larry Kudlow threw some water on that. If the president does, though, come out and say, you know what? We're going to meet with China this weekend, and we're going to reach a deal, and this whole thing's behind us. Do you think the market rallies bigly?
I do. I think the market rallies very bigly. I think that's that's the number one headwind in the market right now. I think, corporate guidance during the earnings reporting season, the number one thing that held back guidance was the unknown of trade, the input costs, the complex supply chains, just all those things that circle around trade and the unknowns there. And I think when you think about the Fed and what's going to make them more aggressive, when those input costs start coming up, it causes inflation. So you're going to see a spike in inflation that's non-economic, and you're going to see a lot of decisions not being made because there's unknown quantities of decisions to be made in 2019.
What's more important, China and trade, or the Fed?
China and trade, I think by a long shot. I think the Fed has proven that they are willing to be data dependent. That's all we need them to do. It's as long as, we hear things like yesterday where they said business spend has moderated. I think that's very good news. I think we're making an assumption the Fed is going to do everything they say. This is the first year they've ever done that. For the last 5 years, they've never hit their target number of raises. This year they happen to hit it. All of a sudden we think they're going to bat 1,000 next year. They won't. They want to do it 3 times. Something will slow them down. They'll probably have to take a pause. And if they don't have to take a pause, it just means the economy is doing much better than we think it's probably going to in 19. So I think it's China. Get China behind us. I think this market can scream.
Okay, last question here, Art. Can the Dow rally if the 10-year goes to 325 or 350? Because we're back in that direction.
Yeah.
Now.
It's certainly in that direction. Sully, I think that the way we felt about a 3 handle on the 10-year in February when the market collapsed almost 9%, and the way we feel about it now is 2 completely different places. I think we're in a better place to understand the drivers behind a 3.25 to 3.5. And oh, by the way, I don't think 3.5 is reachable, until the middle part of next year. But that's okay. I think getting there for the right reason would be fine. You have to understand, the higher that yield goes, the more money that attracts in. And remember, in terms of the competition for sovereign debt, the U.S. still looks the best globally.